What's up guys, welcome back to Money Grow, the channel all about making your money grow. Today I'll be going over exactly what you need to do if you want to start building or repairing your credit score. This video is for everybody, whether you just turned 18 or you've already had credit for years. There are 5 things you need to focus on in order to increase your score, and just to show that I practice what I preach, these are my credit scores shown on Credit Karma. My score has helped me get some of the best terms and rates on my auto loan and my mortgage. So first of all, why would anyone want to increase their credit score? Ask yourself this. Do you think you'll ever buy a car in the future? How about a house? Do you think you'll ever want to apply for a credit card that gives you rewards? Maybe you want to have the peace of mind knowing you can qualify for a personal loan when you need one. All these things and so many more require you to have a good credit rating. If you start building your score at age 18, you'll be so far ahead and ready to plan your future goals. But even if you're older, it's important to fix and raise your score for all those reasons I just went over. If you build your score to an exceptional level, typically above 750, you'll get access to some of the best interest rates when it comes to everything. I'm talking about cars, houses, personal loans, you name it. The banks will love you and they'll line up to loan you money when you need it. Before we get started, I just wanted to give a quick shout out to my amazing Patreon supporters, Prismatic, Erica, and Andrew Paz. Thank you so much for your continued support. If you guys want to be notified immediately after I make a trade in my wheel option selling portfolio, consider supporting me on Patreon. I'll have all that information listed on there, linked down below. In my description, I also have 3 different referral links that you can click for free stocks and free cash. Webull is giving away a stock valued up to $1,600 when you sign up. M1 Finance is giving away $20 in cash, and Robinhood is giving away a free stock like Apple or Facebook or many others when you sign up. Links in the description. So let's take a look at what makes up a person's credit profile. This is what a FICO score consists of. We can see that the most important variable out of the 5 different things that make up your score is your payment history. It makes up a whopping 35% of your entire score. So the most important thing you have to do is make sure you always pay your loans on time, every single month. If you don't have any payment history, the absolute best way to get started is by first opening a secured credit card. This is because with no credit history, you will most likely not be accepted for any other type of credit card, but that's fine because if you go with my favorite secured credit card, this one has really good rewards that are comparable with some of the best credit cards on the market. And you get to pick how much money you want your credit limit to be. If you enjoy this type of content, I would really appreciate it if you like the video and subscribe to my channel. Thank you guys so much. So my favorite secured credit card is the Discover It secured card. I'm not sponsored by Discover, unfortunately, and you don't have to open this account if you don't want to, but opening a secured credit card is step 1 of what you have to do in order to get started building or repairing your credit score. I want to go over why this is my favorite card. All of this info is pulled directly from Discover's website. This credit card is opened with a refundable deposit with an amount chosen by you. So if you just want to start with a small credit limit of, say, $200, just open the card with $200 and you're good to go. $200 will be your maximum credit utilization limit on the card, but you can also go with a higher amount if you'd like. I would recommend taking a look at your future expenses to predict how much credit you think you'll need. The Discover It secured credit card is one of the only secured cards that offers top-tier rewards like this. You earn 2% cash back on gas stations and restaurants, and 1% cash back on all other purchases. Those rewards compared to some of the best credit cards in the industry. And in addition to that, you're gonna get a cashback match for everything you spend your first year with the card. So let's say you spend $5,000 your first year, let's say none of it was spent at gas stations or restaurants, just to keep this simple, and you just earned the 1% cashback rate. That's a free $50 cashback plus an extra $50 because they double your total cashback earned your first year. So $100 total. If I were Andre Jeek, I could do something like this. $100 total. I love Andre Jeek. In addition, Discover allows you to view your FICO scores for free, kind of like Credit Karma, which I also use and showed you at the beginning of this video. So how do you apply? What you want to do is Google Discover It Secured Card or click the link in my description and fill out an application. If you're approved, deposit the credit line amount desired. Your card will then be mailed to you. When you get it, start using it only on things you would have bought anyway. Don't go on a shopping spree just because you have a credit card. That's one of the pitfalls of getting a credit card if you're not used to managing credit. So don't fall into that. Just use it to get gas, groceries, food, any other essentials. Basically, use it on anything you would normally buy. Because why not get some free cash back and start raising your credit score while you do all your normal shopping? And remember how 35% of your credit score is your payment history? This is why it's really important to have cash in your bank ready to pay off all the credit you used with your credit card that month before the due date. Most due dates come at the first of the month, which you can reach out to your credit card provider to change if you prefer a different date. I like having mine on the first of the month, and I just pay off my credit card balance in full at the end of every month right before the first of the month hits. This way you get a flawless payment history and you don't have to pay any interest or fees. If you miss a payment, your credit will most likely take a huge hit. So be on top of this and never spend more than you can pay back at the end of the month. If you start using your credit card and pay it off every month, your credit score will start rising, and eventually you may be eligible to upgrade your Discover It Secured Card into a regular credit card and receive your initial security deposit back. The next most important factor that determines your credit and counts for 30% of your score is your accounts owed, which pretty much just means if you have accounts open with balances or you're using a large amount of your credit limit, then you may be seen as high risk by the credit agencies. This is why I always recommend to keep your credit utilization below 30% if possible, because it really makes a big difference. Even if that means consistently paying off your card multiple times per month, that's still better than carrying a large balance and waiting to pay it off in one big chunk. And according to some experts, only using 10% of your available credit limit is considered excellent. The next factor, which accounts for 15% of your score, is the length of your credit history, which means how long you've had credit. This is why it's so important to start as soon as possible. This takes into account how long each credit line has been established and how old your oldest account is. This is why it's crucial to never close an account, even if you don't use it regularly anymore. Every few months, I'll buy a 50-cent Amazon gift card with my old credit cards and pay them off right away, just to keep them active. The next factor that accounts for 10% of your score is your credit mix. This shows the credit bureaus that you have multiple lines of credit and different types of credit. This can be credit cards, personal loans, auto loans, mortgage loans, etc. Don't worry about getting these just to improve your score. Only open new accounts when you need to, like when you really want to buy a car, when you really need to buy a house, when you need to get a credit card, etc. By the way, there are some great sign-up bonuses that credit cards offer, which I'll go over in a future video. The last factor, which represents 10% of your score, is new credit, which means opening too many accounts in rapid succession. You want to try to avoid this, especially if you're just starting out. Generally, you want to wait around 6 months before applying for new credit. It's not always necessary and sometimes not feasible, but that's a great rule of thumb to follow so you don't overextend yourself and open your credit profile up to too many hard inquiries. If you don't know, a hard inquiry is when a lender runs your credit, which temporarily makes your credit score take a hit. So to summarize, number 1, open a secured credit card. Number 2, pay it off in full every month before the due date. Number 3, only use 30% or less if possible of your available credit limit. Number 4, never close your credit card accounts. Number 5, it's good to have different types of loans, but don't actively chase them just to improve your score. That's counterintuitive. Number 6, don't open too many accounts too quickly. And that's pretty much it. I hope you guys enjoyed and got some valuable information. Go out there and open a secured credit card and start building your score. If you have any comments, questions, or suggestions, please comment down below. I'll be reading all of them. And remember to follow all of my trades on Patreon and get your free stocks in the description down below. Thank you guys so much for watching until the very end. I hope you'll be back for future videos. And as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you next time.